Have you ever asked yourself, should I buy an existing asset or build a new one? If so, this video today is going to be powerful for you as I go through the pros and cons of building versus buying. Let's go. My name is Tyler Devereaux. I have been able to buy a whole bunch of apartment buildings, and I've only been part of one new construction deal. I'm going to walk you through some of the pros and cons of what I've learned and what I learned on that new construction deal. And then I'm just going to lay out the facts of the pros and the cons of each of these. We've been able to buy, once again, thousands of units, hundreds of millions of dollars of real estate, train our students here at the Multifamily Mindset to do the exact same thing, and then be able to get into amazing deals with our investors, with my investment company. Today, I'm going to show you why we target what we target, and hopefully it'll open your eyes to maybe what you should target. All right, if you're looking to do new construction, let's go through some of the pros and cons that I've found as I've looked into this. Pro number one of new construction is lower maintenance costs. It's a newer building. It's a brand new building that you are building, which means there's going to be lower maintenance costs on the building. Now, one of the questions that I get all the time is, as you're building a new property and you put in high quality components within that property, what is the demand for that? Does it attract new tenants? Does it help you charge more rents? It completely depends on what's going on in that market. See, one of the things we're going to do when we do market research, and if you haven't seen any of our videos on market research, we can throw that link in. You can take a look at this. One of the things we look at is new construction starts. I want to know, well, supply demand. What is the supply-demand imbalance? By the way, one of the ways that I find supply-demand imbalance or balance or what is going on is I look at concessions. Concessions are revenues that the owner's willing to give up to obtain a lease. So if there are concessions being offered in the market, that is a sure sign that there is more supply than there is demand. I'll also tell you, though, that when I see that those concessions start to burn off or are no longer there, well, that's a sure sign that demand is starting to outpace supply. But along these lines, if I look into a market and I see that there's a market that's offering concessions and they have a bunch of construction starts, this is one of the things that we look for. That's not a good sign for me. That means they're already offering concessions. They're also bringing new inventory. I want to know what percentage of the inventory is there. What percent of the new inventory coming to market will that actually consist of? That helps me understand if the demand will be there or not. If there's a large influx of new builds, yeah, you can charge more rents. You're also going to higher rents because it's a higher quality asset. You're also going to offer more concessions. Also understand, though, as a downside of this, as we get into a con, downside is you're building it. It takes longer. So you may not even get to a point of being the person who collects a lot of the rents on these properties. Most people who develop, we call it season the property. So we tenant it and then season it. So we tenant it, season it. Season it is usually for at least a year. Well, most of the time a year, at least 90 days, but most of the time a year. And then you sell it and you redo it, which is one of the other cons, man. One of the other cons is it takes so long to turn a profit. Another con is that you're not really creating wealth this way. It's almost like a glorified flip, except you're building it from the ground up. So one of the other cons is the entitlement and approval process as you're building, which is just all the permitting bullshit that you have to go through with the city, with the county, with the state to be able to build this thing. This is what I've learned. At the most basic level, this is what I'll tell you. I told you that I was part of one brand new construction deal that I actually pulled all of my investors out, paid a penalty to do that, and moved them somewhere else because I saw this process happening. It was extending and extending and extending to the point where if it extends too long and you have capital that is there, right there, you're accruing a preferred return to your investors. But if it goes too long on that permitting process, this approval process, maybe the deal cannot support that amount of return back to your investors. That's what I saw happening. It didn't get to that point, but I saw it getting to that point, which is why I pulled my investors out. Here's the basic way and the biggest con that I will tell you on new construction. The more steps, this is in life in general, by the way, the more steps that it takes before you can receive a profit, the more chances are that you fuck it up and don't receive a profit. My advice to you, simplify the process to make sure that you can receive a profit, well, in a simplified way. Okay, pro number one, what I like to do is rehabbing lightly distressed properties. Okay, there's different classes of these multifamily assets. A, it's a newer build. It's not construction, that's just an A asset that's a newer build, already been bought. I never want to be the first owner. Now the second or third owner, I like that, okay? That's like an A asset. A B asset, still a good quality asset, just maybe a little bit older, and then it continues to go down the line. What I like to do is I like to focus on C plus to B assets. This has been our bread and butter as I've scaled my investment company. C to B assets in B areas, and we reposition. Reposition just means rehab them. We reposition them into now a B asset in a B area. It's rehabbing lightly distressed properties. The power of that is it's problem solving. That's what we're doing. We're coming in, an operator has problems, AKA it's distressed. We're able to take care of those things, reposition those problems, fix those problems, and create solid equity and solid cash flow. See, one of the pros is it cash flows quicker. It cash flows quicker because you're buying a cash producing asset. Our goal day one is to buy a cash producing asset day one. See, we're just buying a property in Middle Georgia as we speak. It's a cash flow property day one. And I'm just telling you that the bulk of your portfolio should never be big reposition deals. It should never be construction deals. It's cash producing assets. That's peace of mind. It's also safety. You can also still make great money on those deals. Once again, you cash flow quicker. Pro number two is more favorable. Pro number two is more favorable financing. It took me like 3 or 4 takes to get the word favorable. Tongue twister for me today. But more favorable financing. Why is that the case? Well, because it's a cash producing asset day one. I promise you your lenders like that. See, a construction loan is gonna have different terms. It's a temporary construction loan that then they need to refinance into maybe a short-term bridge loan. Our bread and butter is we like to come into an asset that's cash producing day one, put in, it's called agency debt, so Fannie Mae, Freddie Mac type debt, which has some of the best terms out there for longer term holds. Better rates, more cash flow, more equity upside, less risk. Now, by the way, financing in and of itself is a strategic value add play. See, you're more limited on a construction type basis on the types of loans that you can get. Creative financing on a cash producing asset, there's more creative financing options. There's agency debt, but there's lots of different debt options. It could even be seller carry, could be a sub 2. There's all sorts of different ways that you can get creative. You could also assume the current seller's debt as well, their loan. There's more ways to get creative, and creativity is key, mitigating risk and maximizing profitability. Same thing when you're going in to renovate these units. See, when I'm building it from the ground up, I'm waiting longer. When I go into a cash producing asset, let's say it has the interiors are outdated, and listen, the interiors are where you that's where you get your rent gains. See, if it looks bad on the outside, it looks worse on the inside. That's a fact. But when you go in and you improve some of the curb appeal and then go in and improve what's in the unit, you'll be able to raise rents, not a year from now, not 2 years from now, but right fucking now. And that's powerful because it's quicker. See, a key to any successful rehab project that you're going to do, reposition project that you're going to do, is understanding the market that you're in, the asset that you have, and the tenants that live in that asset in that market. See, I believe one of the biggest problems that business owners, period, make is trying to create a business without understanding the problem that they're solving. Before I go in and put any money anywhere, I want to know, what is the problem that I'm solving with this? What problem does this tenant have? What problems are on this property? And is this thing that I'm injecting capital into, is it actually going to solve the problem and increase the overall experience for tenants? If not, it doesn't make sense to do. See, sometimes you get operators who want to go in and put in what they would want. It's not about what we want. It's about who is this tenant, what do they need and want, and how do we get it to them? Because listen, we get what we want by helping other people get what they need and want. That is actually understanding the market, the asset, and the tenant. Now let's get into some of the cons of rehabbing, repositioning lightly distressed properties. One of those cons is unforeseen or unexpected repair costs. I'm gonna tell you that I have been blindsided by this. This is a learning lesson for me for sure. See, now, that's a con. A new build is brand new. Repairs should be pretty minimum, and it's brand new. If you have repairs on a brand new project, it's probably because you built it with shitty material. You shouldn't do that. But when I'm buying something, I am buying the existing asset, and problems are gonna happen. Repairs are gonna be needed. We already know that going in. A couple ways to mitigate this. Number one is to obviously forecast. Well, you do due diligence. You see, and literally we walk every single unit. We walk all the exteriors. We understand, we get a true pulse of what's happening on that property, so we understand what's happening on the property. Not only do we walk through it, our property management company walks through it. We have contractors, multiple by the way, because every contractor is going to see something different. So we at least have 2 contractors walk through to see what they spot. And it is unbelievable what having just 2 sets of eyes in different contractors, what they'll spot and see. It's super valuable. That's a takeaway for you, by the way. When you're doing it, have 2 contractors walk, not just 1, plus your property management company, plus you, because you're all looking for different things. That's going to help you forecast so you are prepared. But I'm talking about unforeseen things, because the only thing that I know for sure, things aren't going to go according to plan. They're not. Every single property, listen to what I'm saying right here, every single property has its little nuances. all of them. So one of the things that I do to mitigate that, number one, I already know that something's gonna happen. So if I think I need to raise $1 million for capital improvements, repairs, those kind of things, I'm gonna raise more than that. I want a buffer. I want a safety zone, a safety net there. That is safety. It's just like anything. It's just like you in your personal finances. If you make $100,000 and you spend $100,000, you are at risk. Any unforeseen thing that happens in your life, no different on a property and in a business. If we're making 100 or whatever it is, I just need to make sure that I have buffer, savings, things, a nest egg to be able to tap into. That's number one. Number two, every single, like I mentioned, every single property has its little nuances. So one of the mistakes that I made, we take over this property, it's cruising, everything's great. We're about 6 months in, maybe even a little bit less than that. I think it was first quarter or second quarter, so right around there, we start sending distributions. Extra distributions, by the way, not just the preferred return, extra distributions. Then what happens? An unforeseen repair, an unforeseen expense. By us wanting to give extra distributions early, do we put the property at risk? Is what we did. We wanted to make investors happy, but do you want to know how you make investors happy? Protect their money. Investors want to make money, but the number one thing of any successful, like highly wealthy, successful person I've ever studied is risk mitigation. They don't want to lose money. That's their number one focus, because you can't make it if you lose it. They don't want to lose what they already have. One thing that I'll tell you in actionable and how we mitigate it is I don't do any extra distributions in year one. I want a full year of track record on this property to see what that property's little nuances are. That is a way for you to mitigate that risk. Con number two, you're stuck sometimes, especially structurally, with what you buy. So if I'm building something new, I can build it to what the tenant needs, the tenant concerns are right there in that market, that time, that year, that day. That's powerful. In fact, that's not a pro that I mentioned, but is a pro that I'd mentioned on the building side. But on the con side of the buying lightly distressed assets, you're buying what you're buying. You're inheriting what you're buying. So the bones of the property is one of your due diligence things. The bones have to be good, meaning the structural side of this needs to be good. If not, I don't want to inherit that. Do not want to inherit that, but you're limited. You know, we bought a property in Maui and we're rehabbing that property in Maui, but we're limited what we can do there because of the overall layout of the parcel and of the home itself. Now we can still get creative, we can still make it look great, we can still make it our own, but we're still limited to the bones. That's a con. You're buying something that already has it there. It can also be a pro there as well. If you know what kind of structural items you would like to buy, what is favorable, then you can actually, well, you can find it, man, because what you focus on, you find. But if you don't know what good bones are, the structure, the bones. If you don't know what the good structure is, or you don't know what you prefer to buy, well, then you're just gonna buy whatever you buy. So focus on what you wanna find. First step to that is to know what do you wanna find, so you can focus on that shit. Con number three is some tenant disruption. When you're doing the construction. If I'm gonna go in and I'm gonna do some construction, that can be a disruption to current tenants. Now the interiors, I'm not rehabbing the interior, we call it repositioning, but rehabbing the interior of a unit when the tenant is in there. We come in and we turn a classic unit, the interior, to a premium if a tenant vacates. So that's it's not very disruptive. That process isn't very disruptive. If I'm doing something on the exterior, repaving the parking lot, new roofs, new siding, paint, new leasing office, rehabbing the leasing office, there's gonna be some downtime when you're doing that. That's the downside. Tenants do not like to have to park somewhere else. They do not like if they can't come in the leasing offices that's being rehabbed. They don't like when we're putting in new windows and they have somebody with a ladder that's outside their window replacing the window next door. They don't enjoy that stuff. So are there ways that you can mitigate that disruption? There's certainly ways that you can mitigate that disruption, but is it an actual disruption? It is, for sure. Hey, hopefully you found some value from this pro and con of buying or building. And if you found some value, go share this thing with somebody who would also find some value. Leave me a comment down below, like all those things that you need to do, and make sure that you subscribe to the channel as I continue to drop more golden nuggets your way. Live always with aloha. Peace.